Welcome, ladies and gentlemen. This is Brad Matheny. It is October 29th, nearing Halloween, nearing the end of the month, nearing another big week of earnings next week, and elections coming up only about 10 days away. Pay attention. We're getting into some real big rotation. Looks like early accumulation. I just completed the custom index video, and really everything I've been telling you for the past 2-3 months is coming into fruition. The U.S. dollar strength, U.S. market strength is holding up. Global markets are really recoiling and not seeing any real strength. So we're going to go over the TTScanner core list right now. This is the core hot list, core ETF hot list. We had a number of shorts last week. You can see a lot of them are a little under pressure because of the rally we saw last week. These will likely get us out of some trades here over on Monday. So pay attention. They're probably fairly close to stops. They are here. You can see fairly close to stops. Here's our stop level over here. And these are trades that set up because of that deep washout a week or two ago. You can see a lot of trades. This means the entry trigger happened 1 week ago, which is really 2 weeks ago because this is done on a weekly basis. And this is as of Friday. A new week starts on Monday. This is actually 3 weeks ago. These are 4 weeks ago, and this is 7 weeks ago. So these trades likely are going to move into a flat condition. You can see here the XLK technology sector is already flat. SPY is flat, and XLP consumer staple is flat. We could be moving, as I mentioned to you, into a new longer-term trend to the upside. We need to see how this plays out. And this rotation is essentially, it does happen. When we get into, we get into sideways trending. Let me come over here, come over here, and U.S. stock market index. When we get into this type of sideways trending, you're going to end up, understand that this is one of the most difficult times to try to trade on anything. We get this extreme volatility, expanding wedge formation. You can see we had the same type of thing happen here and here. Traders get confused, and that's why we rely upon the, here, I'll show you the allocations page to keep us functionally protected away from risk. So understand, you should be only trading 10% of your stocks right now. 90% of your money or 60%, 65% of your money should be in cash, 25% in metals, zeros in bonds. So when you're taking a look at these trades, when you're actually taking a look at, let me find the core index again, right here, understand that, okay, you lost 1.73% so far. That's 0.173% or less. Because if you take and out, that would be allocate a full 10% of your capital to this trade. If you took 10% of your total capital, broke it into 10 or 20 slots, then this is going to end up being 0.05%. Very small loss. This would end up being 0.25, a quarter of a percent loss. This would end up being 0.35% loss. This would end up being 0.45% loss. You understand, it's very, very small if you realize that you're trading with a very small amount of your capital based on our allocation level. When the rotational modeling system aligns and confirms, then we'll readdress these trades and start moving into larger trade allocations. So pay attention to these numbers. When you start looking at these numbers, remember this is 1/20th of your allocation level or 1/10 of your allocation level. So these end up being very small. 0.5%, 0.25%, 0.4 or 0.2. 0.17 or 0.8 or 0.08. They become very, very small, minor losses when you start trading the allocation levels efficiently. And that's ideally what you should be doing. So let's take a look again at this. First things first, you take a look at what the rotational modeling system is telling us and the allocation levels, these systems. That determines how much you should be putting at risk in the market. So hypothetically, you trade 10% of your capital right here. Now you need to determine how many trades you're likely going to want to take. So hypothetically, you take 10% of your capital, break it into 10 or 15 trading slots with a certain reserve. So if you had, say, $1 million, you would allocate $100,000 into trading. You would potentially put 25 grand into a reserve, which would be part of an allocation to offset losses, potentially from your trading, and have reserves in case you wanted to take an extra trade or two. And that would leave you with $80,000 broken into 10 or 15 slots. That means you'd have approximately $5,000 in each trade. And again, $5,000 in each trade ends up being about a 15th of your total capital, 1/115th of your total capital. And that means this particular loss here would end up being 0.065%. This loss here would end up being 0.18 or 19%. It's like, 1/20th of a percent. This would end up being 0.31%, or about 1/3 of a percent. You're not going to take massive risk if you follow the system efficiently and don't overtrade. The winners here would end up being, so here's 11% winner. This would end up being I got to do the math here real quick, 0.9% winner. This would end up being a 1.8% winner. This would end up being a I got to do the math again real quick, a 2.9% winner. These would end up being roughly a 1.6 to 1.9% winner. This would end up being about a 2.6% winner. So you've got to understand, you multiply this times the amount that you're actually allocating. So obviously if it's 1/10 or 1/15th, 1/10 is easy. Just move it over and you have 0.74. 1/15th would be 0.65% as far as our winner. So anyway, these are likely going to end up getting stopped out depending on what happened next week. I expect next week to end up being very volatile. We've got more earnings. We're leaning in the election. There could be some craziness in the markets. We also have the Fed to contend with. So understand that this rotation will settle, and the rotational modeling system will end up moving us back into some longer term trends. Remember, be cautious, particularly if you're getting into trends where thrusting, I mentioned this to you a couple of weeks ago, does not align. So profit factor 0.54, win rate of 1.29 is not really as efficient as, say, this one, 0.89 and 2.67. This tells us with thrusting, even though thrusting is positive, this is a better profit factor, a better win rate. This is a better profit factor and win rate with moderate thrusting. Better profit factor and win rate with moderate thrusting. These right here, when 0.44, 93, 0.66, and 1.0, they're not the greatest trades. So you can take them, just allocate smaller amounts. Okay, 0.62 and 1.44 is not a great trade. 9.8, 2.4, better trade. Much better trade. It's got a profit factor of almost equal, meaning it's winning more than losing, and a win rate of 2.4 means 2.4 times more wins than losses. Here you have 3.97 and 8.0. Boy, that's a great trade. Let's see what this is. ARKQ. So sure I got that right. Yeah, ARKQ. That's a great setup. This is a great setup. This is a great setup. These little 0.54, 1.29, 0.58, 1.3. These are, they're good setups. They're just not great setups. And you have to realize that by understanding that anything that's, say, below 0.9 and is below, say, 1.1, 1.2 on profit factor is not going to be very solid. So when you get in a combination like this, 44.93, it's an okay setup. I'd only probably allocate 20 or 30% of my capital to it. 0.66 and 1.1, it's an okay setup, except thrust is going in the wrong direction. I'd probably only allocate about 20 or 30% of my capital to it. 1.53 and 3.57, thrust being red, even though it's positive, maybe 50, 60% of my capital. 0.64, 62 and 1.44, thrust in the wrong direction, maybe 30, 40% of my capital. Something like this, 3.97 and 8.0 with thrust red, Okay, maybe 60, 70, 80% of my capital. And that's how I look at these. So let's go and take a look at the core inverse of the recent trades. You can see here that we've got flat here in DRV, flat here in REK, flat here in SRS, and a bunch of flats back over here, SH, SDS, SPDN, SEF, SJB, EFZ, and EPV. These are inverse stocks, so you need the inverse ETFs. So understand that what this is telling us is these trends have ended. There is no real opportunity. You can see thrusting has moved back into negative. The only ones that are still holding up are CHAD, CHAD, and Yang. And then those are the only ones from last week that are still solid as of Friday. This one here is 5 weeks old, TBX and TMV. We've got some great profit, 3%, 30%, 24. And here, look at this, 1 week old in Yang. Boy, oh boy, 39.38% profit. We've already hit our first profit target. It looks like a great trade. And again, look at the ranking. 0.97 and 2.29, 1.14 and 2.43. Thrusting is solid. These are the ones that you want to focus on. Where you basically anything with a profit factor above, say, 0.85 or 89 and a win rate of 1.1 typically, or 1.15 or higher. And those are going to be really good trades. Now, these were good trades here. They just ended up getting stopped out. And these were, like this one's a moderate trade, 0.54, 0.62. This is a pretty good trade, just got stopped out. 0.62, that's a moderate trade. This is a stronger trade. This is a stronger trade. This is a stronger trade. This is a moderately strong trade. This is a weaker trade. And you can see how that plays out with these profit factors and win rates. Okay, next, let's go to the value list. The value list is holding on to a lot of short positions right now. Looks like we got out of ALE. This was one of our big winners here. Cisco, we got out of Microsoft, we got out of Visa, and we got out of CRM, Salesforce. So these trades did not hold up. We are still holding these trades. We have a little bit of rotation. Let me come in here and see where we're at. So -6, -5, -8, -7. And one here that's plus 5.2, that's Hasbro. We've got, as of last week's trades, we've really only got 3 that have held up. Home Depot, Black Hills Corp, and Alexandria Real Estate Equities, ARE. That's these top 3 trades. Otherwise, we're still holding on to some of these. We've rolled into some negatives here, and that's because the market's rolled sideways. So pay attention in the sense that we may see these trades flatten out on Monday. We haven't had great success over the last couple of weeks, but remember, use the profit factoring system and the win rate system as well as thrust to gauge your entries. And we are in sideways rotation, as I've been warning you for many weeks. So these are really great trade opportunities, but they do sometimes roll a bit sideways. Okay, next we have the TTScanner. I have to move this back over here a little bit. There we go. I'll just shrink it down, try to get it in here. Okay, so here we are. We have 1, 2, 3 trades from last week that are still holding up. They're off a little bit. You can see right here. Thrusting is holding up. We have one thrusting pattern here, which may end up getting us stopped out. That's in QQQ. And then we've got a number of flat triggers. IGF is flat. REIT is flat. IXJ, SDS, XLK, IYG, XLB, XLP, IXN, IGM, and IGV. These all went flat. These are very likely newer triggers. We'll have to see what ends up happening going forward. And again, this is because the rotation in the market, the big volatility. We had that big selling a week or so ago, and that probably got these into short trades, which didn't mature very much, possibly didn't hit any targets. Remember, your targets are listed right here. In fact, let's come back over here. This is from the 22nd. This is Monday. So you can see here, XLC is flat, Jets and IYH is flat. We had these new triggers here, and XLU, IHI, and ITB. And now if we move forward, these are IYG. Let's come back here. 22 HD. Make sure I'm on the right area. This is value scan. Oops, am I in the right area? Nope, hold on, I went to the wrong window. So we have XLU, IHI, and ITB. XLU, looking for XLU. Okay, still at the top. IHI and ITB. Okay, last week's triggers, all the new triggers are holding up. So we're off a little bit on them, but last week's triggers are holding up. These triggers have gone flat. These are older triggers. And what I'll probably do is I'll add something in here to tell us how many weeks ago the trigger actually went off. So when it goes flat, I'll add something in here saying the trigger was 2 or 3 or whatever 5 weeks ago, so that we know how long the trigger was, whether it was last week's trigger or 3 weeks ago or 5 weeks ago, whatever, how long this was in a trade before it went flat. And I'll maybe also add a flat price, meaning where we got out. But anyway, we're in rotation. You're going to see triggers start to flatten out. Now, these longer-term triggers here for XOP and XLE may continue to run. Remember, we've already hit our targets. We already have our stops. This trade has been going on for quite some time. These may continue to run if oil moves higher. Okay, so we're in a bit of rotation. We're likely to get a bunch of flat triggers. Remember, stay very focused on this, on the rotational modeling system, and stay very focused on how much you should be allocating and risking into your trades. You should not be trading overly aggressively right now. You should be very cautious, and that will keep your risks to a bare minimum. You might lose, or win 2 or 3 or 4% overall running some of these trades right now. But understand that 92 or 95% of your capital is going to be protected safely in cash. You should not be trading aggressively with any large amount of your money right now until we get good solid confirmation of trending. Okay, so that's where we're at with this. These are for the people who want to trade. If you really want to get in and trade swing trades, this is part of what you're doing. This is part of how the process works. You're going to get rotation. You're going to get some really great trends that last 30, 40, 50, 60 weeks at times. But you also need to understand that there are times to pull cash away and stay safe. And that's what we're trying to do with the rotational modeling system. It's really kind of a top-down structure. Rotational modeling system gives us the broad guidance of what we should be doing with our capital. The custom index charts then tell us what the markets are doing behind the scenes, what we should expect over the next 2 or 3 or 4 months. The TTScanner Hotlists run on weekly swing trading systems. So we're looking here to catch trends that may last 2, 20, 40 weeks in length, but extended volatility in the markets and or indecision and or sideways trending can cause us to get into a little bit of a riskier area. Obviously, it's easier to trend when it's going straight down or straight up. Sideways rotation gets a bit more difficult. And then, of course, the live trades algos are for day trading and or swing trading like rotational trading. But ideally, what's happening is the rotational modeling system is telling us we need to protect capital and stay mostly in cash, trade only with a small percent of our stocks. So again, this means you can trade 10% of your stocks if you want, or leave it sitting around in cash. Same thing here. The idea is we've protected our capital very efficiently away from risk. So when we start looking at some of these trades, what we're actually doing is we're trading potentially with a very small percent of our capital. If you had $1 million in your account, you'd have 940,000 hypothetically stashed away in cash or cash and metals, and you'd be trading with $40,000 or $50,000 into some of these stocks, and potentially seeing a little, $2,000 or $3,000 or $4,000 rotation in that capital that you're playing with. Nothing major. That would end up being, out of $1 million, a 0.3 or 0.4% actual total risk to your portfolio. Okay, guys. Either way, we're looking at a pretty exciting, strong opportunity. When the rotational modeling system shifts into gear, which I think is going to happen fairly quickly, we're going to start to see things line back up into bullish. That's going to move our allocation level higher and higher and higher. And we're going to start moving back into stocks as we start getting confirmation of the trend. So what you're doing right now is you're protecting yourself efficiently and not risking so much, so that we can get back into really great trades when we know that our confirmation level is right and our trending is right. All right, guys. Next, we're going to the rotational modeling system update. I've got to update the chart. This is from last week, and I'll talk to you soon.